D-Wave Quantum is up over 1,900% in the past year. Yeah, you heard that right. 1,900%. The stock trades around $29 today, down around 12% from my last update. So the question is, can the momentum actually continue, or is this where the hype ends? Because here's the truth. D-Wave's revenue last quarter was just $3.7 million, yet the company's valued at over $9 billion. If that doesn't make you wonder, I think it should. Now, there's something happening under the surface that most people, or at least I haven't heard about, talking about. Their bookings jumped 92% last quarter, and another $12 million came in after the quarter ended. That's future revenue locked and loaded. So what am I watching, right? It's not the revenue, it's the runway. D-Wave has $836 million in cash, and they're burning about $18 million a quarter. That's 12 years of breathing room and a rare safety net in a speculative space like quantum computing. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That is a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. That's why in this video, I'm going to show you what I think the market's missing with D-Wave, why analysts are calling it a strong buy, and whether this stock's massive run-up is backed by real fundamentals or just some other shiny story that ends in a crash. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Let's dive in. So let's start with who D-Wave Quantum is, what they do, because quantum computing sounds like something straight out of a sci-fi movie, right? D-Wave has been around since 1999. Can you believe it? And they're one of the pioneers in quantum computing. The company operates in Canada, but its headquarters are in California. D-Wave is also considered the grandfather of commercial quantum computing because, well, it was the first company to sell a commercial quantum computer. Pretty simple. Now, what does D-Wave actually do? Well, to put it simply, they develop computers that solve incredibly complex optimization problems. It's something like a computer that can find the best possible option when you have millions or even billions of choices. Quantum computers like D-Wave's can process countless outcomes once, not at one time, or not one at a time like traditional machines. It's kind of like upgrading from a flashlight to a floodlight. Now, D-Wave doesn't only sell quantum computers, they also have a service model called Leap. And other companies can use Leap to access D-Wave's quantum systems through the cloud. That way, businesses don't need to buy the entire quantum computing machine itself. It's the more accessible and affordable option. So I think you could say that D-Wave isn't just selling computers, they're renting access to computing power. Think of it like AWS, but for quantum. Now, D-Wave's most important customers are the huge enterprises and government agencies. Most are businesses in manufacturing, logistics, financials, pharmaceuticals, and even in the defense industry. Now, some of D-Wave's most notable customers are Volkswagen for traffic flow optimization and Lockheed Martin for software testing. And here's why that matters. Because when the defense and auto giants are your clients, it signals early adoption by industries that move billions. And that credibility you can't buy. So with that kind of consumer base or customer base, how's the stock holding up? Because the market doesn't care about potential, it cares about results. Well, D-Wave stock is trading at around $29, a bit lower than the last time I covered it. And this drop happened after the US government denied rumors that it would invest in quantum computing. Still, the stock is up around 250% year to date and an astonishing 1,920% in the last 52 weeks. That's not just growth, that's a rocket ship. And whenever I see that kind of move, I have to ask one thing. Is this momentum or mania that's powering it? I mean, these sorts of questions always come up in my Discord channel. And, to answer them, we need to look at the company's numbers. Price history and momentum indicate how the stock is moving, but the real story is going to be found in the company's financials. But before I dive into the most recent financial statement, let's have a brief recap of their previous quarter's financials. Now, in the previous quarter, revenue rose 42% year over year to nearly $3.1 million. Bookings increased 92% to $1.3 million. And bookings are basically future committed revenue, right? It's actually more important than revenue because it shows what's coming further down the line. And when this metric grows faster than revenue, well, it means that customers are lining up before the product even ships. And that is usually a good sign of confidence. Now, adjusted net losses also increased 26.5% year over year, with most of it due to research and development. Now, overall, their financial report was a mixed bag with both the top and bottom lines moving. And I've learned that in the early stage technology companies, big R&D spending isn't a red flag. It's the price of innovation, but it still eats into the cash flow. So let's have a look at how the company did this quarter. Revenue doubled from the same period of last year to $3.7 million. But $3.7 million in revenue for a company valued at over $9 billion? Well, yes, and that's one of the disconnects that investors need to understand. D-Wave is growing revenue from a notably smaller base. And as you can see, the company's price to sales ratio is a staggering 995. The price to sales ratio shows us how much investors are paying for every dollar of the company's revenue. So investors are paying nearly $1,000 per dollar of revenue here. And that's what I call a valuation gap. The story is huge, but the numbers, they haven't quite caught up yet. And that's where opportunity and risk collide. Now, moving on, bookings for the third quarter grew 3% to $2.3 million. And D-Wave also reported that it closed over $12 million in additional bookings after the end of the third quarter. So even though the reported number looked flat, the post-quarter action hints that deals are ramping up faster than the headlines suggest. Net loss came in at $140 million, which was over 517% higher than the same period last year. But before you panic, it's not as bad as it seems. $121.9 million of that net loss was purely accounting adjustments related to warrant liabilities. Basically, these are just rights to buy stocks at a specified price, just like call options. So when D-Wave's stock price shoots up, accounting rules require them to report a paper loss, but it doesn't mean that they actually burn through all of that. So it's not them losing real cash, it's just the bookkeeping noise that shows up when the stock price runs too hot. It happens a lot with small caps that move up fast. Now, adjusted net loss decreased 22% year over year to $18.1 million. And that shows that D-Wave is managing its expenses better than it did last year. And it's also sitting on $836 million in cash and cash equivalents. So with their current net loss of $18 million, that means they have about 12 years of runway to figure things out. And that's a lot of breathing room. I mean, most startups don't get 12 months, let alone 12 years. And that gives them some serious optionality. They can afford to experiment and scale without begging for additional capital. So what's the verdict here? Is D-Wave stock a buy at these levels? Well, let's consider that a consensus among 11 analysts rate D-Wave stock a strong buy. 9 have a strong buy rating, 1 has a moderate buy, and just 1 is a strong sell. This brought down the average to 4.55. The high target price is $50, which suggests about 67% upside from the stock's current price. And I think this high target assumes that momentum in the adoption of quantum computing is going to continue and that D-Wave is leading the charge. So you could say that D-Wave's either a generational moonshot or a momentum mirage. The difference? time and execution. But what do you think? Do you think D-Wave has the potential to grow, or is it going to remain stagnant, resting on its past achievements? Let me know in the comments below. And while you're there, if you found the video helpful, don't forget to like and subscribe to the channel because it'll help others find the video, it supports the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.